good morning and welcome to NDTV Profit. My name is Rucha Sumaya and today we are going to discuss Mastek, which has come out with its first quarter FY25 earnings. Talking about the earnings, revenue was up around 4.5% while margins were largely flat at around 12.8%, while net profit was down about 24% during the quarter. And we are being joined by the CFO, Mr. Arun Agrawal, to talk to us about the results. Hello and welcome to the show, sir. Thank you for joining us. What's your take on the results this time? Margin largely flat, but revenue up about 4.5%.
Thanks, Rucha, for having me here. We are really happy with our quarterly performance. As we have stated in the past, our order book continues to grow while the macroeconomic environment challenges and the delay in decision-making continues. But the strategic investments which we have made consistently over the last 3 years has started giving the results. The same is reflected into our consistent order backlog growth, which is $260 million as we speak, 23% growth year on year in INR terms. The same has started reflecting into our revenue growth. We have grown 4.3% in INR terms to be precise and 4.1% in constant currency quarter on quarter, which is really good growth in line with our expectation. On the margin side, yes, EBIT is mostly flat. However, on the operating EBITDA side, we saw some dip, which is again, as you ramp the growth, there are certain costs which are associated from the timing when you start the project versus, we have got the resources onboarded. There were some challenges from the timing perspective, and also we had some period in the EMEA. More from the timing perspective, again, as you accrue for them. From the business perspective, as we see, the revenue growth will continue to be there, and also margin improvement will be there in line with our expectations. So we are really confident and looking forward to quarter-on-quarter growth going ahead as well.
So, what kind of margins do you expect the company to achieve going ahead, and what will be the key levers?
Yeah, as I mentioned, on an operating EBITDA basis, we have reported 15.2% this quarter, and we track more operating EBITDA, Richa. This will continue to improve. We have stated that our objective is to trade in the range of 17% in the short term to medium term. However, it will take a quarter or two to come back to that level, but upward of 16% is the starting point, and gradually in the coming quarters, we'll move to 17% kind of a range.
Right, I got that margin point, but let me move to order backlog. It has been around 2,100 crore for the current quarter, but when I look at the past quarter also, the quarter 4, it has been around the similar line. So in terms of order book, was this quarter a little muted?
Quarter 1 is always seasonally lower quarter. From the timing perspective, you book very strong order in quarter 3, quarter 4, because that sets you up for the next year growth, right? But that was the focus. Quarter 1, where the most of the renewal happens and some of the net new deals also gets closed as a pattern which we have seen in Mastek. So we are really happy because whatever numbers we were planning, we have closed better than that, which has reflected into the numbers out there. So from the market perspective, we don't see any challenge in the areas we are operating at. But yes, deal and decision making continues. The longer deal cycles are there. Discretionary spends are still under a lot of scrutiny. So those patterns will continue. But there's a pattern which has emerged in terms of all the geographies where we are operating, the cloud deals where we are operating as well. We are getting good momentum building up there, which is reflected into our numbers.
So discretionary spends is still under pressure, is what you mentioned.
It's under a lot of scrutiny. Absolutely. The things are improving. The customers are becoming much more lighter, but scrutiny has not gone away.
So do you think the second half of the year will be better as US elections turn out and, things be a little clearer? Will that be good for the company?
We are looking ahead to it. The UK elections are over. We expect a lot of deals will also start coming in the UK market because we have been very strong in that market as well. And US elections, and as Fed starts cutting down the rates, down the road, we believe a lot of momentum will build. We are also looking forward to that momentum building because all of those are going to help in terms of our revenue growth further on top of it.
Okay, so with that, let me just move on to the geography kind of bifurcation in terms of revenue. UK, Europe has been growing at a higher pace than the US. So what kind of growth over here do you expect? Around 17 to 19% is what the aspirations were?
That's a more medium to long-term aspiration, Richa. Obviously, it depends upon the market scenario. As we are operating more with a muted market, despite that, giving 4% growth is of a high confidence to us. But yes, market improves, then obviously the same will reflect into our ambition of delivering better than market growth in the coming period.
Sure, sure. Thank you so much for joining us. I think we are out of time right now. A lot of questions, but we'll definitely catch up with you over the next quarter. All the best for your earnings ahead, and thank you for joining us.